Hello everyone, and welcome back. In this video, we're discussing an incredibly bold and specific prediction for the potential XRP spot ETF that has everyone talking. The CEO of Canary Capital, Steve McClurg, is not just optimistic. He's projecting that an XRP ETF would attract a staggering $5 billion in inflows within its very first month of trading. Furthermore, he insists that it wouldn't just be successful, it would outright outperform the Ethereum ETFs. Let's break down his reasoning, compare it to historical data, and see if this ambitious forecast holds up to scrutiny. The headline claim from Steve McClurg is certainly attention-grabbing. In a recent Friday interview, he reaffirmed his projection that spot exchange-traded funds, ETFs, tracking XRP would attract $5 billion in inflows in their first month after launch. To fully understand how monumental this prediction is, we need to look at the performance of the existing crypto ETFs. According to data from Sosovalue, the Bitcoin spot ETFs recorded a net inflow of $1.46 billion in their first partial month of trading, which began on January 11, 2024. A full month later, their cumulative net inflow reached $3.26 billion. The performance of the Ethereum spot ETFs provides a more sobering contrast. They experienced a net outflow of $483 million in their debut month of July 2024 and a net outflow of $5.70 million exactly 1 month after their launch. A considerable factor behind these underwhelming numbers, as the article notes, was the massive outflows from the Grayscale Ethereum Trust, ETHE. Against this backdrop, McClurg's prediction of $5 billion for XRP seems extraordinarily bullish. He doesn't just expect it to do well. He expects it to become the best-performing investment product upon launch, outright outdoing both Bitcoin and Ethereum. Now, the natural question is, why is he so confident? McClurg cites several key reasons. First, he notes that aside from Bitcoin, XRP is the most popular token on Wall Street. This recognition, he believes, will be a primary driver of its instant success. This sentiment about XRP's strong institutional appeal is echoed by others in the industry. Ethereum CEO Sal Gilberti attested to this in a recent interview, noting, "They call it the XRP army for a reason," highlighting the vibrant and massive demand from the XRP community. Secondly, McClurg believes that XRP ETFs would outperform their Ethereum counterparts from a pure financial services standpoint. This aligns with his previous statements that XRP has a clear and distinct use case in the payment and cross-border settlement industry. His argument suggests that this tangible utility in a multi-trillion-dollar market makes XRP a more compelling narrative for traditional financial institutions and ETF investors than Ethereum's more complex smart contract platform narrative. The article also mentions that the chances of an XRP ETF launching in 2025 continue to rise, with tracking platform Barron currently putting the odds at 87%. McClurg agrees with this optimistic outlook, suggesting that XRP, along with other assets like HBR, Litecoin, and Solana, will see ETFs before the end of 2025. He also points to the existence of XRP futures products on exchanges like the CME as a factor that further enhances the likelihood of a spot ETF approval. Of course, a critical analysis requires us to look at the potential impact and the challenges. An earlier report highlighted that if an XRP ETF were to record the projected $5 billion inflow, the price of XRP could see a notable upside, potentially reaching $26 per coin. However, it is crucial to maintain a balanced perspective. The crypto ETF market is fiercely competitive, and investor appetite can be unpredictable, as clearly demonstrated by the Ethereum ETF outflows. The success of an XRP ETF would depend heavily on broader market sentiment at the time of launch and its ability to avoid the massive Grayscale-style outflows that plagued Ethereum's debut. In conclusion, Steve McClurg's prediction is not based on mere hype. It's rooted in a belief in XRP's unique position on Wall Street, its clear utility, and the power of its dedicated community. The historical data from Bitcoin and Ethereum provides a mixed but informative backdrop. While the $5 billion target is undoubtedly ambitious, it frames a compelling narrative for what could happen if the regulatory stars align and the institutional demand he predicts materializes. It sets a very high bar, and it will be fascinating to see if reality ever gets to meet this expectation. What do you think? Is Steve McClurg's $5 billion inflow prediction a realistic target based on XRP's utility and popularity, or is it overly optimistic given the performance of other altcoin ETFs? I'm very curious to hear your perspective. Let me know in the comments below. If you found this breakdown useful, please give the video a like and subscribe for more clear and critical analysis. Thanks for watching.